Okay, so the last subject I'd like to talk about in this module is insider trading and whistleblowing. Now, a manager has got to reflect and has got to think about the concept of trust and loyalty in order to nurture and to develop an ethical culture in the company that is inclusive and that nurtures each of the individual components of the company. Um, if an employee is willing to be faithful to the corporate goals, they have to be corporate goals that mesh with the ethical personality of the of the um, of the employee. If you're trying to mesh the ethical personality of the employee and it's in conflict with the the goals and the ethical culture of the company, it's not going to work well. And I'll give you an example. When I was in the furniture business, I had a product line that I bought from the States, and I was the exclusive dealer for that product. So when I put it on sale, we made a pretty substantial profit on the on this furniture, and we would get it in by the tractor trailer load. At some point, uh, a group of the salespeople came to me and they said, you know, you're selling this furniture at a price and you're making so much profit, it's not fair. So, of course, as the owner of the company, I said, well, what do you mean it's not fair? So they said, really, this product should be selling for less. Um, but because you have the exclusive, you're selling it for more. And I could see that this was really upsetting them. Now, I could have answered them and said, look, guys, you know, the goal in business is to make as much money as possible. There are other products where I don't make as much profit. And so in this area, if I make more money, you know, what's the problem? You work for me, I don't work for you. But I understood that at the end of the day, I'm not the one who's out there standing on the floor talking to customers, trying to sell the different products. In order for my staff to be able to sell product to the customers, they felt that they had to be totally honest and to deal with complete integrity with the customers that came in. And for me, that was an amazingly great culture that had kind of just evolved. At any rate, I understood that this is what was motivating them. So even though I could give them a great lesson in business economics and explain to them why I was entitled to charge whatever price I felt the market could bear, I nonetheless felt this was a great moment to be able to bring all of these people even closer together and be helpful to me. Because ultimately, all the sales were going to come through the salespeople because I wasn't working on the floor. So I turned around and I said to them, what do you guys think I should sell this furniture for? And you see, the minute you reverse the story, suddenly they become managers. And they're now confronted with, in their minds, the same question. Well, gee, you know, we want to be profitable, we want to make money, and you know, so they talked and they discussed it, and they came up with a conclusion that I had to probably sell it for about $50 less. So I said, are you guys sure that's going to work for you? They all agreed, yeah. I said, okay, we're going to change the price. It'll be $50 less. They all walked out. They were all happy. And we kept selling that merchandise by the tractor trailer load for about another, I would say, year and a half. Now on each unit that I sold, I lost $50 that I could have gotten had I sold it for more. But it was very clear to me that in order to create a culture in the company that encouraged the staff to do the very best that they could do, I needed to have them be part of the management decisions. And I needed to allow them the ability to assert their integrity. And that's what this was about. They were thinking that the profit that we were making on this item was more than honest. And that's how they thought. I'm not going to debate their thinking. I understood as the manager that what I had to do was keep them on my side. That this was not the time to create some kind of a conflict, which I knew, of course, I would win because I'm the owner. So, of course, I was going to win. And so that is an idea and a thought for you to understand, that you as managers, when you're looking at these situations, have got to try to understand it from the perspective of your employees. I'm not saying that this is always the answer, because you have to have the permission to do those things, but it gives you an insight in terms of how to manage people. So it's the same thing when we look at insider trading and whistleblowing. And let's talk about insider trading first. Insider trading, for most people, is a what? What's the crime? You know something, you tell someone something, they make money off it. What's the problem? Well, the difficulty with insider trading is that it's hard for us to see the damage. After all, you have a friend who works at, I don't know, Google, and they tell you that it's very secret, but Google is coming out with a brand new Google phone. It's going to have 1,000 apps. It's going to be unbelievable. They suggest, the announcement is coming in 2 weeks, they suggest buy as much Google stock as you can buy. So you run out and you buy as much Google stock as you can buy. Then the announcement comes out and the stock doubles in value. I mean, it doesn't really happen that way, but let's just pretend. If you bought $1 million worth of stock, you just made $2 million. Who's the victim? You bought at a fair price. You didn't coerce anyone into selling it to you. Who's the victim? It seems like a victimless crime. And yet it's not. And yet it's not. Why? Because the unequal transmission of information about public companies violates the operation of the financial network, the financial system, the stock market. It allows people with inside information to capitalize on that information and therefore ultimately penalize the people who didn't know it. By that I mean all the people who sold you shares in Google that felt they were getting a good price. Now suddenly they sit back in the chair and say, whoa, if I would have known about that new Google phone, I would have never sold my stock. And you were the guy or the person who did know. So that leads to a distrust in the financial system, because there will always be an inside group of people who understand what's going on. They know what the new stuff is that's coming down the pipe, And they would be able to manipulate the market so as to constantly enrich themselves. And for you, that would be unfair, disadvantageous, and you'd lose faith in the stock market. And the stock market is the financial instrument that people of wealth use to grow more wealthy. Martha Stewart, just to give you another example, a real example. Martha Stewart was getting on a plane to go on vacation somewhere in the Mediterranean, and not in the Caribbean. Before she gets on the plane, she gets a call from her stockbroker telling her that her friend is selling his stock in the company he owns, which is Inclone. It's a chemical company. They make medications. So they don't know what's going on, but the fact that he's selling stock is a red flag, and your stockbroker suggests that you should sell your stock. Okay. You say sell the stock. You're a multimillionaire. You have about $200,000 worth of this stock, less than 1% of your holdings. You sell the stock, you go on vacation, you come back to America. When you get off the plane, the FBI is waiting for you, and they arrest you for insider trading. You say, what? Their primary investigation, they tell you that they've seen in the records of this company that on such and such a day you sold your stock 2 days before the announcement was made that the FDA was not going to approve the medication that this company had developed, and therefore their stock price plummeted 30 to 40%. And you sold your stock before that, you must have known. And you say, like, what are you talking about? Sorry, we are charging you with insider trading, and that could be a minimum 10-year federal penitentiary term. What? What did you do? What's going on here? You get home, you look through all your emails, you don't see anything incriminating, but just to be safe, you delete all the emails and you wipe them off your server, much like Hillary Clinton did with about 30,000 emails. Gone. The government now takes you to court. They would like to see your emails. Say sure. They see that you wiped a whole bunch of emails off the server. Now they charge you, in addition to insider trading, with obstruction of justice. Now the truth is, you didn't trade with inside information. Your broker called you and you merely responded. That's all you had to present in court. But the destruction of the evidence, of the emails, that was an obstruction of justice. And for that, Martha Stewart was found guilty. And for that, Martha Stewart went to jail. Why? Because the government wanted to send a message that nobody is safe from doing things that are unethical and violate the trust of the Security and Exchange Commission and the rule of law for the stock market. The government understands that without integrity in the stock market, no one will invest in the stock market. So if you can go and manipulate stocks and make money at the expense of other people who do not have the information that you have, then you're basically going to destroy the system, and they can't have that. So the protection of the financial market is obviously far more important than the individual role that Martha Stewart had to play, and unfortunately, she went to jail. When we're talking about the obligations of employees, you can see why insider trading and sharing that information then can become a significant problem, and why you will be held liable for that. not because your crime was so great, but because you are threatening the stability of the financial system, and that is a big deal. And we'll see this in other stories as well as we move along. The final thing that I want to talk about, just very briefly, is whistleblowing. The most important thing that we have to understand, well, let's just define whistleblowing. Whistleblowing is taking that same confidential information that you can't use to buy or sell shares and revealing it to the public if it is damaging to the integrity of either the financial system or the health and safety of the company. So, for example, if someone is manipulating the stock value of the company and it comes to light in your accounting work, let's say, or you discover that, again, with documentation, that the company is dropping pollutants secretly in violation of EPA standards, both of those things, if they couldn't be resolved, need to be corrected because they are legal and ethical violations. So a whistleblower is the person who reveals that these things are being done. And all of these scandals, the Enron scandal and the WorldCom scandal, all of them were revealed by whistleblowers, just to let you know. However, the first thing that you do when you're whistleblowing as an ethical manager or an ethical person is understand that there is collateral damage. The first thing we do is not necessarily call up the news media and blow the story up, because blowing the story up will not only hurt the guilty, but it will hurt the innocent as well. Because if this closes the company down, then all the good employees that used to work there are now unemployed. Now, what happened in the past you can't fix, but certainly one of the first things you have to do as a whistleblower, other than, of course, getting documentation, you need to have proof, and it has to be hard proof, is to try to work your way up the ladder of management. So you try the middle management, upper management, the board, and if you're unsuccessful in convincing them at all of those levels that they have to resolve this ethical issue, then you could argue it's reasonable to go public and blow the whistle in order to correct the unethical behavior, because that's at the core of this. So whether it's a pollution story, a financial manipulation story, a bribery story, whatever whatever the story is, it's critical that to maintain the integrity of our financial system, to maintain the integrity of our environmental laws, sometimes these things have got to be revealed, but first and foremost, they have to be addressed internally. Every channel of communication must be exhausted, even though they may fire you along the way because you're going above their head. It doesn't make a difference. You have to think about the other people that are involved. Now again, if you have no documentation, if it's something that you suspect but you don't know, like I saw a truck but I don't know what the truck was really carrying, then you're being foolish by attempting to think that that is a whistleblowing situation. But if you have the documentation and you can see that this is clearly the truth, then you have that obligation as an employee that does not leave their ethical values at the door when they come to work, to reveal this information and to facilitate the change. Because remember, we are trying, in all cases, to minimize the collateral damage to other employees. So, again, your text will talk in greater detail about whistleblowing, but essentially what you need are the facts, the documentation, and the and the exhaustion of all the internal levels of communication before you make it a public event. And so I think that kind of covers a lot of the different aspects of the employee obligations in the company, from the ideas of conflict of interest, to greed, to insider trading, whistleblowing. All of these things, as you can see, demands an employee that is both ethical on a personal level and is not obligated to lose that ethical profile when they walk through the doors of the business. And that's what we're trying to kind of encourage you to understand and to talk about.